Now, here with us this morning to take apart Facebook's IPO and handicap its future as a public company is Paul Kedrosky, a former equity analyst and currently an early-stage venture capital investor, the man behind the blog Infectious Greed. He's also one of our contributing editors here at Bloomberg. And we'd also like to welcome our other buddy, New Yorker senior editor Nick Thompson. He's also a Bloomberg contributor. Gentlemen, good morning.
Good morning, Eric.
So first impressions, what do you say?
I think the John Ehrlichman bot looks so much like John Ehrlichman, it's remarkable. I mean, how is it that he's still up at 3 in the morning?
Red Bull. They're drinking Red Bull.
Wow. No, I mean, you know, what's the remarkable thing is, I think, is obviously going to start happening around 11 o'clock this morning. But the things that I'm watching for, and I was talking to people overnight, they're trying to see whether or not anyone got an allocation on the retail side.
And it was pretty slim from what we understand, right? Only 15%.
It was incredibly slim. A lot of people with very large accounts who had put in bids at the price, at the top end of the range, did not get filled, like zero allocation. So the thing that I think is worth tracking is, given that we've been talking about this incredible demand, what it's likely to do, post-issuance, it speaks again to the idea that we're likely to see a pretty significant pop because a lot of people weren't able to get allocation. And, this is the trap for retail investors over and over again. But nevertheless, that's what it told me.
I agree, absolutely likely to have a significant pop. I love the hackathon because what's going to happen after today, Facebook is going to have huge cultural problems, right? A lot of those people are going to be putting their Bentleys in the parking lot. They're not going to know how to deal with it. There's going to be rich people. There's going to be poor people. There are going to be a lot of people leaving for their yachts. And Facebook is also going to have the problem that they won't as easily be able to offer shares in the company to attract employees. So how do you make it still seem like a cool place to work, a hip place to work? A hackathon is a great idea. I don't think a hackathon for lunch roulette is maybe the most perfect idea. Hackathon is a genius. So good job, Zuckerberg.
How did this instantaneous wealth problem, if we could call it a problem, play out for Google?
So at Google, there was this idea they were on a higher mission. So, it was almost a point of pride inside of Google that the IPO couldn't be a distraction. And why not? Because the culture said it could never be a distraction. We're in the business of discovering the world's information and allowing people to share it. This felt like a higher, noble objective. And they gave people all along, until relatively recently, this 20% free time where they could actually go out and, pursue other things they were interested in without leaving the company. Right. Well, like Google Cars and all of these other projects. And that gave people an outlet for a while, but nevertheless, as Nick points out, it had a corrosive influence on the culture. I mean, think back about the last time a Google product came out there where you stopped cold and said, this is something that really transforms the way that I use the web or transforms the way I consume information. It's been a long time. I don't blame that entirely on the IPO, but the flow of innovation out of Google has really slowed down fairly dramatically.
Well, and one small note, they did have to set a corporate rule that anybody caught looking at the stock price during the day would have to give a share of stock to whoever saw them because they had become so obsessive, all looking at their terminals, figuring out exactly how much money they had.
Facebook as a company, besides the culture issue, has already proven itself as successful as influential, Paul, but it has not proven itself yet as an investment. Today, it gets its first chance. What's the difference? I mean, all of a sudden now we're going through all of the financials.
Yeah, and I mean, in many ways, proving yourself as a business will turn out to have been a lot easier. It's kind of like this classic business. You talk to scientists and they say, you know what, I've done the hard part, I've done the science. And then the entrepreneur says, no, the hard part is turning the science into a business. Well, what the investor says is to the entrepreneur is, you think you've done the hard part, now comes the hard part. The hard part is managing us on a quarterly basis to make sure that we feel simultaneously like there are great prospects ahead, but also that there's enough mystery for us to continue to give you a valuation you want. That's a hard step.
To Paul's point, Nick, how much different do you think Facebook is going to be as a public company than it was as a private company?
It'll be hugely different. We're going to have a lot more scrutiny. We're going to have a lot more people looking over the numbers. The amazing thing about Facebook is now that we've looked at the S1, we've looked at the amended S1, we've looked at all these numbers, has there been a single number that is better than we thought it would be once we started? I mean, the valuation is exactly as it was. We've been saying $100 billion company since last summer. But every time we look at the advertising revenue, every time we look at the income numbers, it's like, well, the growth is actually not that great. In fact, it's growing more slowly, the advertising revenue, than Google's advertising revenue. Yeah. Now, the numbers that have been fantastic, monthly average users, engagement, all that stuff, that's why we have such expectations for Facebook, but the revenue numbers have not been so good.
Well, here's the thing. Facebook, in many ways, has been like a publicly traded company for a couple of years, right? Because of Shares Post and Second Market, all those private exchanges. And we've already gotten, you could argue, the one-day pop from the stock because at its last close, it was was $44.10 on shares post. So are we going to get that first day pop if we've already seen it in the secondary market?
Well, it's a scarcity problem. I mean, the way to think about it, and this is part of the reason why the stock probably won't open until like 11 o'clock this morning, is there's a supply-demand imbalance. The first supply-demand imbalance worked itself out in private markets, and that's why we saw this continuing increase in the number of shares offered. And it's in part why we will see at least some first-day pop. But the second supply-demand imbalance, we won't really see itself work out until probably 11 o'clock this morning when they can start trading the thing. And these are the imbalances that lead to the pops, though, and both of them exist, and so you will see some kind of pop. How big? It depends on maybe Greece, I think.
They also managed the IPO quite well. They lowered expectations quite a bit about 2 weeks ago. Oh my gosh, it might only be $75 billion. And now we see all this momentum coming in, all these people getting excited, and they've recreated the buzz that you need for a nice
And
pop.
here's the obvious follow-up question. You just mentioned Greece, right? The macro environment for this IPO could not be any worse. You've got the European debt crisis entering a new stage, an uneven recovery here in the U.S. Does all of this make Facebook look better than it actually is?
I think it makes Facebook, in many ways, look. I mean, this is like fear factor for IPOs, where it's this incredible, let's throw a couple more things out, let's make it a little bit harder, let's, at the same time try and eat some bugs, and then we'll go out, right? And this is what's happening. The climate could not be much worse, and yet Facebook is coming out, and so people are actually focusing a lot more, I think, on the negatives than they might otherwise, in part because the environment, the macroeconomic environment, are leading people to do that. And and so I think in retrospect, it'll feel, historically speaking, a little like the Google offering. Remember how much skepticism it was met by, because the guys had done, what was it, a Playboy interview or something else, which in retrospect turned out to be entirely irrelevant. It was more of a process issue, and I think Greece is playing the same role in the Facebook offering.
I don't think actually there are some things that aren't as bad for Facebook as they could be. We haven't, because the tech IPO field has been cleared for quite some time, we haven't had any IPOs that have come out that have been bubble. We haven't had real collapse in tech stocks. So I think it's not such a terrible time for Facebook to come out.
Let's return to our conversation with Bloomberg Television contributing editors Nick Thompson and Paul Kedrosky, and that argument from Eduardo Saverin drawing a few chuckles here.
Well, it sounds, from what we know, it sounds like he's living more than he's working in Singapore. I think the Eduardo Saverin thing actually makes us... It reflects well on Mark Zuckerberg, because you think back, and when they were both 18 or 19, they were very similar people. You look back at those early chat messages of Mark Zuckerberg. He's kind of a goofy, not totally likable guy, and he has clearly evolved into this CEO who is beloved at the company, respected, hardworking, mature. Eduardo Saverin has, evolved into who Eduardo Saverin is now.
So
Rock star of
Paul, what does
Singapore?
Zuckerberg do to strike the right tone inside Facebook headquarters at Menlo Park today? Is it all about high fives and victory laps, or does he have to do something a little bit different?
Yeah, I mean, and this is, for better or for worse, a Silicon Valley tradition in terms of how you approach IPOs. That it's like every other day. We go out, they had this all-night hackathon. We create product, and we're focused. They have a whole, almost like a playbook of studiously ignoring what's happening on the market. And then every time someone's not paying attention, it's kind of one of these, right? Where it's like, what's it doing right now? But there's this. It's very sort of deeply built into the culture, not just at Facebook, at everywhere. That you just don't do it, right? Because the wealth thing, that's for other folks. We're in the business of changing the world. We're in technology, and so we don't look at things like share prices, and they do this. Right? So.
But it is going public, and the fact is, I mean, it could create a whole new genre of social media, which is largely untested, which could eventually end up leading to more competition for Facebook down the road, especially if it's successful.
Well, and that's the lesson of Instagram, right? Is that it's the remarkable how quickly on a wired planet, things that get a little bit of traction in one place can become gigantic in a whole bunch of places, at a speed that's sort of unprecedented. And so the lesson is that on small amounts of capital, it takes maybe 10% as much money now as it did 10 years ago to create a startup. So there's far more of them, and now there's a bunch more people who, in a sense, can bankroll themselves because they're newly moneyed coming out of Facebook. So you should expect, it's almost like being sort of pecked to death by startup ducks. They're just going to be coming and coming and coming, these hordes of startups, all of them very interested in exactly the same markets that Facebook operates.
I don't think they're going to be pecked to death. I think what they're going to do is they're going to gobble them all up. I mean, one of the things that will determine Facebook's
It'll go either way.
whether they can do with Instagram is, that one, and that one, because they're going to have a lot of money now.
Yeah.
Who's next to list life after Facebook? I mean, in terms of how the Facebook IPO changes the prospects for a Twitter, for a Pinterest, for a Flipboard.
I think Twitter is probably, once they figure out their economic model. I mean, the fact that Facebook is able to have an IPO, a hugely successful IPO, with having a business model that really is kind of
half-baked.
quarter baked right now. So Twitter's business model is about a 16th baked, so this actually sets the bar a little bit lower for them. We'll see about that.
Yeah, I think Twitter's obviously the one to watch, and maybe they're not paying attention and haven't noticed, but my guess is they have. And so, as a result, there's going to be some, significant, maybe some changes in how quickly.
Before we head to break, let's bring up a quick sort of old tech versus new tech chart to show you where Facebook's valuation now ranks against some of the most valuable tech companies in America. Apple, of course, still up there. Have a look. It's just below, well, just $25 billion below Oracle. How long do you think it's going to take before Facebook is in that neighborhood?
Well, to get ahead of Oracle and Intel, I would say about a couple hours. Based on what we're seeing right now.
Around 2 o'clock.
Around 2 o'clock would be at Oracle and Intel. By about a month from now, it'll be back to where it was today, so about $25 billion less than Oracle and Intel. That's going to be a couple years before I think they're the size of Google.
What do you think Facebook will end the day today?
I've been saying around $60, but again, I mean, macro factors are going to dictate what happens here. And again, the $60 is a price that'll probably seem like a high price 6 months from now as this thing sells off with an overhang of secondary stock. But I mean, it's so much of it's dependent on things outside of Facebook's control at this point. I mean,
Greece, for instance.
Like Greece, right? So.
Gentlemen, so great to have you here. Thanks for coming. Paul Kedrosky and Nick Thompson, contributing editors here at Bloomberg Television.